Greetings to you all. Welcome you all. Your boy Chatmaster here in Johannesburg, South Africa. Today we are going to look at the significant demand engulfment, SDE, which is one of the operating procedures at Chatmaster FX. So without wasting much of the time, let's go straight into the business of today. So we are going to look at the general information of SDE. So this setup is actually a high probabilistic setup. As you can see that it falls under the Big Five strategies. So by that virtue, it is a higher probabilistic setup. Through our back testing and forward testing, we found that this anatomy, this standard operating procedure, is what it takes to fight the battle in the Forex market. So it is advised that for the mentees to actually understand this concept very clearly, they need to go through the price approaching course. So the price approaching course is going to come very soon. Expect it in the next coming weeks. So in this course, we are going to look only at sell setups, not necessarily meaning that this strategy only works on sell setups only, but it can also work on buying setups. So for the sake of simplicity and for the sake of our time, we are only going to look for selling setups. So let's go straight to the anatomy of the SDE. So as you can see, guys, on the anatomy of the SDE, we have phase 1 and we have phase number 2, then we have phase number 3, then we have phase number 4, then we have phase number 5. So you can see, guys, here on phase number 1, the market may be coming from a rally base rally, which is what we call RBR, or the market may be coming from a drop base rally. So these are two possible situations when it comes to a selling setup. So once you identify your phase number 1, then you go to the phase number 2. So as you can see, guys, on phase number 2, what happened to the price is that when the price actually made a rally base rally, the price was able to come back to this base and it actually cleared this base, and you can see that the price rallied up and it was able to break this high, creating a higher high. So once we have a higher high here, guys, then we have our phase number 2. So that's how you can understand this setup, guys. You need to identify phase number 1 first, then you identify phase number 2. So we go to the phase number 3. So on phase number 3, guys, you can see that as the price was actually coming back to this base was able to hold this price, and the price went up to create a higher high, and you can see that the price was able to drop and it came to this base again. So this is what we call reaction by rejection. So guys, you need to identify this phase. Is very important. So you can see that we had 2 visits. In other words, what we are saying is that the price came to this base or this demand, which is what we call the first time back, and the price was able to come back to this base on the second time base. So this is a second visit, our first visit and our second visit. So guys, what happens in the market is that you can be able to see that the price may actually visit this base or demand maybe twice or more than twice. So you have to look for that, guys. Once you can be able to see such kind of a thing, then you can be able to see that the phase 3 has been validated. So guys, once we have phase number 3, then we go to phase number 4. Phase number 4 is one of the important phases on the anatomy of the SDE, and you are going to see its application and its relevance as we go through other standard operating procedures in this course. So you can see, guys, that this demand was finally engulfed. So this demand was actually being weakened as the price came back for the first time and it came back for the second time. You can see that this base has been weakened. Once this base has been weakened, the price finally was able to engulf this base. So once the price engulf this base or engulf this demand, then it's an indication that the price is more likely to drop. So once the market gives you an indication like that, you wait for the price to come to a valid or a significant decision point that is allocated above the SDE. So guys, what you have to understand here is that all the decision points that are above this demand or that are above the SDE are considered valid. Between this region, this base and this higher high, those decision points are considered valid. So there should be a decision point here. So guys, you can see here we have phase number 5. Phase number 5 is optional. Sometimes you may find a decision point not like this, but it might be allocated here. So it's very, very important to look for that on the live market. But the central point is that there should be a decision point. If there is no decision point, then you can be able to experience a scenario whereby the price comes here. From here, it goes and engulfs this higher high and it creates a new higher high, showing that the market is still in an uptrend. So there should be a decision point to actually hold the price. So it might be a decision point, it might be a QM level, it might be an MPL. So guys, we looked at the valid decision points as we discussed the valid ones on the journal article number 2, the Dabero Maru. So guys, you need to check for that so that you can see how to filter and to look at the decision points that are more likely to hold the price. So this zone, guys, phase number 2 at Chartmaster FX, we call it the classical zone. It is what we call the classical zone. And guys, you need to know that the entry, as you enter here, you put your stop loss above the MPL or the decision point or the QM level or all those things that has the possibility to hold the price. So guys, I want to let you know that once you see a decision point that is allocated below this demand, it is considered as an invalid decision point. Why? Because that's the area where there is manipulation, or the manipulation is done here. So you have to know, guys, that you need to actually identify the decision point here above the SDE and below this higher high. So guys, that's the anatomy of the SDE. That's the anatomy of the SDE. So now we go to the terms and conditions. So the entry should be at a significant decision point, and you should put your stop loss above the decision point, and the target profit should be put on the cap of phase 4. You are going to see it as we go to chart examples. So guys, these are the phases of the SDE. You can see a detailed explanation of phase number 1, where on a sales setup the price should be coming from a rally based rally or a drop based rally. If it's a buy setup, the price should be coming from a rally based drop or a drop based drop. On phase number 2, guys, you can see that which is our classical zone, a new higher high must be formed, and for a buy setup a lower low must be formed, and we have our classical zone. Then on phase number 3, there should be at least 2 reaction by rejections before the price engulfs the base of phase number 1. So guys, on phase number 4, the distance of engulfment from the base of phase number 1, the engulfment might be insignificant or significant in order to be considered valid. Take note that even if the base is engulfed slightly with a wick, then that demand, we consider it as engulfed. Then phase number 5, an area above the SDE where a decision point is located. And guys, the decision point must be located above the SDE. Those are the valid decision points, and you need to filter them. You need to filter those decision points to find the best decision point that you can be able to use. So let's go to the conceptual understanding of SDE. So you have heard us talking about decision points, and by definition it is a critical zone that is a higher probability of holding the price. Usually the PA validates the significance of the decision point. So guys, just to have a clear explanation on this concept, what we are basically saying is that when the price approaches a decision point, it should approach it whether in a form of a fake out or a 3 drive or a compression, or it's a compression plus liquidity, or those price approaching, or maybe it's an impactful pattern. You need to be able to see that happening so that you can be able to determine that this decision point is valid. So basically the price approaching is actually telling you that this decision point that we are approaching is the one that is significant. So once you see that happening, then you can be able to place your trade. But if you don't see any PA, no PA, no go, no PA, no trade. Okay? If there is no PA, no trade, guys, no trade. No trade, guys. You need to look for the PA. So you have a full understanding of the concept of PA as we go with the course. But for now, I think you now have a rough idea about the 3D. You have seen the 3Ds, you have seen the fake outs, you have seen what we are saying is compression, but you have a full and a deeper understanding of those things as we are going to give some presentations on the price approaching standard operating procedures. So a decision point is considered as a candidate only if it is located above the SDE. I've actually said something about it, and this is actually a summary of what you need to see or to find out in the market in order for you to consider that this is a SDE. So an SDE is considered valid only if there is a classical zone, a reaction by rejection of at least 2, and engulfment of the base and a significant decision point. So guys, this is what you need to look for in order for you to qualify that this setup is a significant demand engulfment setup. So guys, do not create your own SOP. Okay, you need to use these setups as they are. As I have told you that we backtested these things, we forwarded these things, and we know the probabilities of their success before even we place a trade. We know the probability. We've actually backtested thousands and thousands of flashcards, and we really know the variations of this setup. So guys, do not create your own SOP. Once you see that these conditions are not meeting, then ignore that pair, look for another pair. There are many pairs in the forex market, so do not force a trade where you should not be forcing it. You need to see all these conditions being validated before you enter a trade. So guys, let's go straight to the chart examples. So example number one, guys, you can see that we have phase number one, we have phase number two, we have phase number three, we have phase number four, we have phase number five. So you can see, guys, that there is a base here, which is what we call the demand. So you can see, guys, on phase number one that the price dropped and there was a base and it rallied up. So this price is actually coming from a drop base rally. DBR. This is a DBR, guys. So once you identify that there is a DBR, then you can know that the phase number one has been validated. So you'll be having your checkbox, guys. You have in your checkbox, you have phase number one, phase number two, phase number three, phase number four, phase number five. So what you do, guys, you need to tick all the boxes. If you are not able to tick all the boxes, then leave that setup. Look for another setup. There are many forex pairs in the market. You cannot finish them, guys. Okay, do not create your own SOP. So we have phase number one here, guys, and you can see that the price was able to engulf this and it actually created a higher high. So once we see that we have a higher high here, then we can be able to draw our phase number two. So you go to your checkbox and you tick the box of phase number two that it has been met. So here, guys, we have phase number two, and we can see, guys, that on phase number three, we can see that this demand has actually been tested once, and it was also tested here. So it has been tested twice. So once we have a reaction by rejection of at least two, then we can consider phase number three valid. So you go to your checkbox and you tick phase number three box. So guys, we go now to phase number five. On this one, guys, you can see that there was a slight insignificant engulfment of the demand. As I told you before, that even if it's an insignificant, guys, even if it's a significant one, then guys, you need to be able to see that this phase is actually valid. So this is what the market does, guys. This is a tricky, guys. It might not engulf to a level that everyone can see. It can just have a smaller engulfment, just to give a sign to just the 5% of the successful traders, so that the other people who actually blows their accounts, etc., you cannot be able to identify this. So you have to look for such kind of engulfment, guys. This is a trick, guys. This is a trick. I told you guys we back tested these things and we have tested the flashcards. I don't know how many flashcards we were able to test them. If you would check our database, guys, of the flashcards that we have of these setups, there are many, guys. So we have seen these things happening, guys. We are not talking something that we don't know, guys. We are talking something that we have experienced on the market, both on back testing and on the live market, guys. So wherever Chartmaster is saying, guys, you have to listen. You have to listen very careful so that you can be able to trade in line with the Chartmaster. So guys, you can see that we have phase number 4. You go and tick the box for phase number 4. So guys, you can see here that the price, it actually rallied up to a decision point inside the classical zone. So guys, take note that if I have alluded before that all the decision points allocated above the SDE are considered as valid. So guys, you can see here we have a decision point here and also another decision point here and another decision point here. So guys, what happens is that when the price now after engulfment, remember you are now only going to place a trade once the phase number 4 has been completed and you have realized that you have some decision points here inside the classical zone and also above the SDE or above this demand. So guys, as the price is now coming now, guys, this is what happens most of the time. You have been waiting. Remember, trading is a waiting game, guys. It's a waiting game, guys. So you see, you have actually identified your phase number 1, phase number 2, phase number 3, phase number 4, and now you are just left with the price approaching here. Then guys, you see that you are not given any indication here. Then you say, I've waited for phase number 1 up to phase number 4, so I cannot leave this setup. Guys, don't do that, guys. Don't do that, guys. It's suicidal, guys. Once you see that there's no price approaching here, guys, leave that setup. Even if you have been scouting that stocking that set up for a long time, it doesn't matter, guys. You need to look for the price should tell you that now we are landing and now we are going to reverse. Okay, guys, so you can see that as the price was coming from this, we can see that we had a decision point here. So you can see that this decision point was able to hold the price for a short time, but finally the price was able to break it. Now you may have entered a trade here, but guys, there's no PA here. There's no PA here. So guys, this is risky, guys. You're actually putting your life at risk, guys. You are in a battle. You are in a battle. So you need to be very careful. You need to ensure that you have the camouflage. You see, you have all the AK-47s. So you don't just place a trade, guys. Okay, you need to look for the market to tell you what you need to do. And guys, you can see we have a decision point also here, and you can see that when the price came to this one, it actually did not give us any PA, and you can see the momentum, guys, of the price, that this price was going somewhere. So you can see that this decision point also was not going to be a significant one. So you'll be filtering these decision points, guys, until you are left with a decision point that is very critical and that has got a higher probability to hold the price. Okay, so guys, you can see that now as the price came to this decision point, and guys, this is a W Maru. Go and check the type on the module on the journal article number 2. So guys, you can see that as the price approached this decision point inside the classical zone, you can see, guys, that this decision point was actually approached in a form of a 3 drive. So once you see the 3 drive, guys, then it's a confirmation, it's a PA, and it is telling you that, guys, as we are approaching this guy, this is the guy that has the possibility to hold us, guys. So once you see that, guys, then you can be able to place your trade. You put your stop loss above this higher high, and you can say, guys, that we have also a fake out here. We can see that we have a resistance here that was broken up, and when the resistance was broken up, it actually broke with stronger momentum, looking at a valid decision. As the price is coming with a momentum, it's actually looking for a valid decision point. So once it reaches here, you can see that this guy was able to hold the price, and the price dropped. Okay, the price dropped. So guys, as I have alluded before, that the safest take profit, guys, should be here, guys. Should be here. This is the safest take profit, guys. Maybe you can allow other trades to run, but you need to take some of your profits here, guys, because on this depth of engulfment, after the break or the engulfment of the base, then this is your target profit, guys, and you leave other trades to run, guys. You leave other trades to run, guys, and once you've hit your take profits here, put your trades on entry. Put your trades on entry, guys, and once you put your trades on entry, then you know that even if the trade goes against you, you know that you don't have any loss, and you've actually banked something here, guys. Okay, so this is example number 1. So let's go to example number 2. So guys, as you can see in example number 2, guys, the same concept applies, guys. We have phase number 1, guys. What is our phase number 1? We can see that from the phase number 1, the price is actually coming from a drop base rally. Okay, so the price was coming from a drop base rally, guys. So here you draw your phase number 1, you tick your box, then you go to phase number 2, guys. You can see that a new higher high was created here, guys. So once you see this new higher high having created, then you actually draw your classical zone here. Once you draw your classical zone here, you can see that here this demand was actually engulfed. It was engulfed insignificantly. Once this was actually engulfed insignificantly, you can see, guys, that we had some reactions by rejections. We have 1, we have 2, almost 2 reaction by rejection. So reaction by rejections. So once you see that, guys, then it actually tells you that the phase number 3 have been validated. So here we have phase number 3 validated. So guys, you can see that we have phase number 5. You can see, guys, in phase number 5 here that we have multiple decision points. We have a decision point here, 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 we have a hidden base there. So guys, once you see that we have multiple decision points and you don't know what to do, guys, this is what you need to do. You need to wait for price approaching, guys. You should see a price approaching. As you can see, guys, here the market has got strong momentum. It has got strong momentum, and once you see this, then it means that these guys are going to be ignored. These guys, they are going to be ignored. So you can't place a trade on such a higher momentum like this. You wait for price approaching in order for you to enter, guys. Once you don't see any PA, don't enter a trade. Leave that pay, look for another pay, guys. If there is no PA, no go. No PA, no trade, guys. You need to understand that, guys. It's not rocket science, guys. It's not rocket science. In Forex, guys, it's a waiting game, guys. You need to wait until you have found a perfect setup, guys. Then I can tell you, guys, once you wear your camouflage, guys, you fight the battle. I can tell you, and you win, guys. You win. So guys, see here, guys, that is the price now is coming to look at a decision point. You can see that this decision point was actually able to hold the price here, but the price actually broke up, and you can see that this decision point was able to hold the price for a smaller period up to this depth. But finally, the price came up with strong momentum again to a cap area, guys. Also, you can place a trade on the cap area, guys, and you can see that this one is a double maru. I think it's a type 1 here, if I'm not mistaken. Go and check journal number 2. It's actually double maru number 1, guys. So you can see that as the price actually approached that decision point, it actually approached it in the form of a 3D. So we have a 3 drive here. So once you see that we have a 3 drive or any other price approach, then that's where you can be able to place your trade, guys. And your safest take profit is the depth of engulfment of phase number 4, guys. This is the safest take profit, guys. If you want to, if you are a swing trader, you can leave some of your trades, but you take partial profits here, then you leave other trades to run. Let's go to example number 3. On example number 3, guys, you can see here we have phase number 1, and you can see here, guys, that the price actually was coming from a drop base rally. So once we have a base drop rally, guys, you can see that we have phase number 1, then phase number 2, the market was able to create a new higher high, and you can see, guys, that with some reactions by rejections of 1, 2, 3, 4, 5. There were many reaction by rejections here before the price was able to engulf this demand. So phase number 3 is completed, and you can see that the market was able to engulf. So once we have this engulf, and you can see that there's a flip here where support actually turned to resistance, guys, and you can see on phase number 5 that we have multiple decision points with this one, with this one, with this one. So you need to filter this by actually seeing the price behavior as the price is actually approaching the decision point. So guys, you can see that what happened here is that when the price came up, you see, guys, we had 1, 2, 3 touches, which is a fake out that happened here. So once you see this alignment of 1, 2, 3, remember the retail traders, when the price comes back here, they're actually looking to sell here, you see, at support resistant levels. So this is what they do now. They actually push the price to an MPL or a valid decision point before the price drops. So usually it's a stop hand. Yeah, this one is a stop hand. So it means all the retail traders, they will have been stopped out here. And now the breakout traders also we have placed a trade here, but now the price finally drops and they are now in the danger. So guys, you can see that here we had a flip here where support tend to resistance. So that's one of the price approaching that we saw here happening. And once you see an alignment like this, then know that a fake out is more likely to happen. So there was a fake out, guys, to the cap area, to actually went to the cap area, and where there's a cap area, then you put your stop loss just above this higher high, then the price was able to drop. This is your safest take profit, guys. This is the safest. Why do we mean it's safe? Then we really know that it's safe. It's safe to take your profits here. But for the swing traders, you can take your partial profits and leave some to run, so that maybe you can enjoy the full potential of the trade. Once you have some trades running after taking some partial profits, then you need to take your stop loss and put it at break even here. Okay, so that you know that you are no longer having any loss, and we have banked something here. We've actually put something in your bank, which is a good thing that we have done. Okay guys, let's go to example number 5. Example number 4, I don't want this tutorial to be very long, guys. So you can see here we have a rally base rally. So phase number 1 is completed, and you can see a new higher high was created. Phase number 2, and you can see here, guys, that this base, it actually about 1 2 reaction by rejection. So phase number 3 is actually validated, and you can see here we have a decision point here, we have a decision point here, we have a decision point here, and we have our cap area. So when the price actually, you can see here the phase number 4, the price actually was able to engulf this demand. Once the price was able to engulf this demand, you can see, guys, that as the price was approaching the cap area, so guys, this is what you do, guys. You can see there's a flippy here, there's a flippy. So usually when there's a flippy, which means we are now targeting this high. That's how you can be able to filter some of the decision points. So you can see, guys, that when the price was actually coming to this, you can see this was able to hold the price just for a short while when the price was able to continue going. So there was no real price approaching. So what happens here, you can see that this is what we call compression plus liquidity. There was a compression here, and you can see of higher momentum going to a critical decision point. So this was not able to hold the price because there was no strong PA. So you can see, guys, that here we had a confirmation of a 3D. Once you see a 3 drive and we have a compression plus liquidity, so we can see that this cap was able to hold the price. You just put your stop loss above here, then you can place your trade here. So guys, once you place your trade here, guys, this is the safest take profit, guys. And take safest take profit, then you can leave some of your trades to run. Once you take partial profits, take your stop loss, put it to break even, and enjoy the ride, guys. So this is example number 4. Then we go to example number 5. On example number 5, we are seeing a scenario here where the price was actually coming from a drop base rally. So we had the phase 1 completed here, and we see a new higher high was created. Phase number 2 completed, and we can see here we have a reaction by rejections of 1 2. So the price was able to have some reaction by rejections. Once we see that, we know that there is more likely to be engulfment of the demand, and you can see that this demand was finally engulfed, and with phase number 4 has been completed, and now the price is now going towards a certain decision point. And you can see that in this zone we have this decision point. So we are waiting for the price to come here, but now as the price was approaching this decision point, you can see that the range breaker actually was having heavy momentum. So you should not have entered any trade here because there was no PA, no call. So here, guys, you can see that we have the hidden base. Go and check the journal article number 2. You are going to understand what I'm talking about, and you can see that the price gave us an indication that this is the base that is significant. As you can see that this base was actually approached in a form of a 3D. Then you can be able to enter your trade here. Just put your stop loss above. You may put it above this higher, but it's very risky because once you put it very high here, it means that if this trade goes against you, then you are going to suffer a higher drawdown. So you need to minimize or to reduce your risk as much as possible. My mentor always told me that what you have to do as a trader is think of your risk first before you think of your target profit. So you can see, guys, that as the market was coming down here, you can see here that on phase number 4, that will be your first to take profit. Then maybe you can leave some of your trades running. Once you take your partial profits here, put your stop loss, put it on break even, so that when the trade goes against you, you know that you are not going to have any loss. So thank you, guys, for watching this video. So this is the whole concept of significant demand engulfment. This is one of my favorite setups, guys. You can even see the way I was explaining it. I actually love it and I enjoy it very well. The significant demand engulfment. I love this SOP. It's one of my best SOP. So guys, what is left to you is go to the live market, be able to come up with as many flashcards as you can. Once you can be able to come up with some flashcards, then I can tell you that once you are on the live market, you can be able to trade these things with confidence, because the thing is all about confidence. If you don't backtest these things, then it means that you are not going to have confidence in the market. And once you see the setup, you can hesitate to place a trade because you don't have any statistical analysis that you have done towards the probabilistic outcomes of those strategies. So you need to backtest these things and be able to see yourself what is the winning rate and the striking rate of these strategies. So guys, those who want to understand more about these standard operating procedures, you can join our Telegram classroom. We have already began doing some lessons, so you are free to join, guys. You are free to join so that we can be able to complete this course together, and guys, that you can be able to have your breakthrough in trading. So guys, don't forget to like, share, and to hit the notification button so that you can be able to see each and every video that we release. So yeah, it's your boy Chatmaster signing out.